Now, Bitcoin just lost one of the most important support levels we've been watching for many weeks. And now the market is starting to price in the possibility of a deeper move to the downside, where we have that major support level sat. Now, we're seeing momentum shift bearish across crypto, leverage getting wiped out, ETF flows are slowing down, and macro uncertainty hitting risk assets very hard. Now, at this point, a big level everyone's watching is the 72K major support level that we have. Now, honestly, this move isn't just about technicals anymore. There's a bigger crypto story tied into this, and it's happening right now, especially with Kevin Warsh stepping into the spotlight and market is starting to rethink the entire Federal Reserve outlook. Now, today we're going to break down exactly what happened, the key Bitcoin level to watch for next, and why traders are suddenly nervous again, and what we could see in the next upcoming few weeks. So stay tuned till the end so you don't miss out. Now, Bitcoin has been holding above the major support zone for a while. Buyers defended this multiple times, but eventually the pressure was too much and we actually ended up breaking through. And the move to the downside has been relatively sharp. So what made this breakdown important wasn't just the level itself, it was the way that the price reacted afterwards. Now, instead of bouncing aggressively, Bitcoin continued weak relief moves and lower highs, usually, which is a sign that buyers are losing that control. Now, we did come to a low of roughly 74,213, which is lower than the previous low we had when we were trading within this short-term support level. So at the same time, we actually saw liquidation spike across the market and a lot of leverage longs got wiped out during this move, which accelerated the selling pressure even more. I actually got a very bad trade on that yesterday. We lost quite a bit, and I'll show you that in today's trading live. Now, technically speaking, once support breaks and fails the reclaim quickly, traders immediately start looking towards the next major demand area. So right now, that level sits around $72,000. Now, that's the zone where we could potentially see stronger buying interest come back into the market. But if macro conditions continue getting worse, even that level could come to some kind of pressure. And now the story that is hitting crypto pretty hard right now. So a huge part of the conversation right now revolves around Kevin Warsh. So markets right now are trying to figure out what a more hawkish Federal Reserve could mean for risk assets like Bitcoin. So for people who don't know, Kevin Warsh has historically been viewed as more aggressive when it comes to inflation and monetary policy. So when traders actually hear that rates could stay higher for longer or cuts may not come as quickly as expected, assets like Bitcoin usually act negatively. So the question is why? Because crypto thrives when liquidity is flowing into the markets. But when interest rates stay elevated, money becomes more expensive, investors become more defensive, and risk assets start losing the momentum. And that is why we have seen Bitcoin acting like a tech stock again. You can actually see the correlation between Bitcoin and Nasdaq increasing whenever macro fear dominates the market. And right now, the three things that the traders are actually worried about is sticky inflation, higher bond yields, and the possibility that the Fed stays restrictive longer than expected. And now that combination creates a massive pressure on crypto. So realistically, if we come back to that level relatively quick, then we could still be in a move for the upside. If not, then a potential to that 72K major support level is definitely where we're kind of looking to go to. And now another thing that's changed recently in the market sentiment. A few months ago, every dip was actually getting bought instantly, as we saw previously. As you can see on the chart, buy. Every single dip was getting bought. And now we have made a lower low, and we're now making lower highs as well, which is quite concerning. But now traders are actually hesitating because spot Bitcoin ETF flows have slowed down. And in some cases, we're even seeing outflows. And that matters because ETFs were one of the biggest drivers behind crypto's massive rally. Institutional demand gave the market confidence, but once these flows weaken, the market becomes much more fragile at the same time, the retail sentiment has completely shifted. You can see it on social media now. People are nervous, every bounce gets sold, and fear spreads quickly once support levels start failing. Now, to be clear, this doesn't automatically mean Bitcoin is entering a full bear market. But it does mean that volatility is probably going to stay elevated, and until Bitcoin can reclaim lost support levels convincingly, traders are likely going to stay very, very cautious. Now, what happens when Bitcoin actually does end up reaching this 72k level? Now, there's basically two scenarios that we could see. Scenario one being that Bitcoin finds strong demand around that level, buyers step back in, and we get a relief rally. Now, a relief rally would look something like a bounce on this level at 72k, and then we come for a further push towards the upside back into that 80k region and potential highs. Now, that would probably calm the market down temporarily and give traders confidence that this is just a correction inside a larger bullish structure. But scenario two is what traders are worried about more. So if Bitcoin loses the 72k level with heavy volume and weak buying pressure, the market could start pricing in at an even deeper correction, looking to, let's say, about 66k. Now, if inflation keeps rising, yields continue climbing, and the Fed remains hawkish, Bitcoin could struggle to recover quickly. So over the next couple of weeks, traders are going to be watching economic data very, very closely, and especially inflation numbers, Fed commentary, and the broader market sentiment. And I'll keep you guys updated, so make sure you're subscribed so you don't miss out on any of the news, so you can put yourself in the best position you can. So for now, Bitcoin remains under pressure after losing a major support level, and all eyes are on that 72k zone. The technical data is real, but the biggest story is really about macro uncertainty and whether markets believe the Fed will stay restrictive longer than expected. Add in weaker sentiment, ETF uncertainty, and rising volatility, and it makes sense why traders are becoming much more cautious right now. But as always in crypto, things can change very fast. And right now we are actually seeing a rather large amount of liquidity in the upside for 166 plus K at 77,630. So a possibility that we could reclaim this level relatively fast over the weekend is still on the books. And if that does happen, then we can still be looking towards that 80k zone. If not, and we break down to the 72k zone, then we could be in a bit more of a situation. So if we actually bounce off that 72k level, then things are looking okay. And we haven't broke that structure fully that we had in the hourly time frame. So as you can see, we've been moving within this major level for a long, long time now. So if we move past that 72k level, that could indicate a move to about 66k. If we actually get that relief, then the market could be still looking for that upside. And I would like to know what you guys think in the comments below. Do you think Bitcoin holds 72k, or are we going to head even lower? Now, before you go, I recommend you check out the link in the description below that will take you to Evedex. Now, Evedex is a fully decentralized exchange you can use for all of your trading. There's no KYC verification, so you don't have to worry about things like that. There are also prize pools on there. You can win an iPhone, AirPods, Apple Watch, and so many more interesting things. Now, if you're looking to currently trade on the best platform there is, then look no further than that description box down below. Now, as always, drop a like, that will be greatly appreciated, and I'll see you all in the next one.